Good afternoon, everybody. Thank you for tuning in. This is Harmeet. It's November 11th, around 1 p.m. Eastern Standard Time. I'm going to be quickly looking at SPY, QQQ, and IWM. Let's get to it. All right. The last time we left off, I'm going to show you where we were. We were about here. At this position, our last broadcast, and we were talking about how we could see some sort of support right here and look for the price to move higher. If you haven't seen that, you can go ahead and go back and check those videos out if you like to. But anyway, so on this one, just it's a pretty straightforward. We were anticipating this move up. There was timing here at this area. I took that timing off because we don't need it anymore. Again, you can go back and look at the other video to see what the timing was. And we were anticipating it to have some sort of support and start moving higher and give us a positive outlook. Did not expect this kind of move, of course. It's a pretty bullish move, but this is also very stereotypical of a first wave, first and fifth wave, where you see this large momentum come in and take out all the shorts and have some sort of a short squeeze to get the things rolling. And that's pretty much what we saw here, it looks like. And I can say at this point that we did end the second wave. We did end this wave, the second wave, from here. It took a little while. As you can see, we made this nice little W pattern, and we're rocking and rolling from here. This was the reason I said it was that we're out of this second wave is because I think I mentioned this many of times that we are above this confirmation point right here where wave one ended. So we are well above that. It is also okay for it to go ahead, challenge this area and actually get up above it and then come back, have a little bit of zigzag wave two, and you're looking to go up higher. I am not going to be going over what my targets are at this point. Let's just see how things develop. But from overall look of it, I am very bullish. I do expect some sort of pullback. It may or may not happen, but just be aware of it. This is your first pullback that you're gonna see. This is so we are, again, this okay is 3 of 1, okay, and this would be 3 of 2, and now we're waiting for the money wave to come. And that's what we want to I am waiting for, at least, to start making more bullish bets on the market. No rush. These things will take a little while. I don't expect it to take, obviously, as long as this second wave took. This took a long time to kind of get through it, but I am expecting it to go higher. All right, let's get to the next one. Okay, so let's look at the Qs. The last time, again, when we left off, we were coming into this zone right here. We were seeing some sort of reaction from the market from that area, and I was expecting some sort of bullish action to take place, and that's exactly what we got. There was also, again, timing here at this area around here. And just know that you can always go back and look at my other videos to check the timing again. On this one, again, it pretty much exactly what we wanted to see on this area. We got everything that we were looking for. We had a completion of Y wave of this larger fourth wave complex structure that's been forming. I'm gonna go ahead and show you two different counts on this. The first one is the primary account. I am still looking at this as still being in consolidation because we have not gone over and confirmed the consolidations over. Okay, so we are still below the last high, and where the confirmation takes place, where we can say, okay, it's actually making a positive move up, and there is positive reaction in the market. So stereotypical, ABC to the X. We saw this neat little a 5-wave impulse move. Again, this was the area I was started looking at to say, I want to start looking at this. I think I've mentioned this before in my previous videos. When I see support at 38.2 or 23.6, I'm jumping in, I'm buying, I'm getting on it. Okay, especially when you had a breakaway gap like this we had. I am ready, I'm ready to go, and that's exactly what we did. We traded this all the way up here. I don't know if we got up to this point, but the pretty much, the way I have my running stops, we got out right here. That was it. As soon as I got into the gap, we were out. Okay, and that I did have another trade on, got stopped out immediately. That was for a loss, but hey, that's what it's for. We don't know exactly what's going to happen. So again, I still think that we are in, according to this count, that we are still in consolidation. That how long that would last, I don't know. We can see that it's a larger part of this zigzag, and expecting it to come down here. That's what the expectations are before moving higher. What we did hold, one of the, as much as I don't like this pullback, I think the pullback is a little too deep. That's why I still wanted to keep my consolidation pattern up. So as you can see, this guy right here, it's a lot different than this guy right here. These values, these zones, of course, this pullback, again, like I said, this pullback is a little too deep. If it was right here and got going, I think that would have been awesome, but it didn't. Well, we had a vaccine news, and that kind of took everything. But anyway, long story short, the chart is still bullish. Okay, there's no reason for it not to be bullish, but you also have to be aware that we are in this bigger structural thing that's going to happen. Does it have to happen that way? No, it can just go straight up. Okay, but those are the decision points you have to worry about and understand. Let's look at the alternate. Quickly look at the alternate one. Okay, so the alternate one, I'm looking at it a little bit differently. Okay, so there's two different confirmation points that got me thinking, hey, that we are in a larger first wave over fifth wave, so 5 of 1 that we are in right now. That this is the fifth right here, so 5 of 1 right here. This is 5 of 2 right here. Okay, so that's pretty much all this is saying, is that we had this first move, we are having the second move, and we're ready to go see the third move. Okay, again, it made a structure that is bullish, or I think it's bullish, is because we got up above this secondary confirmation. We still have not gone through the primary confirmation, but I think that may be coming. But the secondary confirmation, that clearly tells me that, okay, it's above the last high and last major high, and it kind of tested it, came back down, and that's okay. It happens all the time in the first wave. This is where you see, people get bullish, they get to the resistance, and they start selling off, and it kind of got the selling got accelerated with the vaccine news that came out. So excuse me, need coffee, afternoon coffee. Anyway, so expect and watch this. I am fully expecting it to go higher. There's no reason for it not to. If it does end up failing here, if it does end up failing one of these zones right here, you can always expect it to come back and test this lower trend line. And I think that does it with Qs. Again, this count specifically says that we have started the fifth wave. The one that I'd have before says that we have not started the fifth wave. Okay, so those are the things that I'm looking at. How I will trade it will depend on how the price action reacts. Okay, I may trade it conservatively with doing lots of credit spreads, versus where if this count is valid and we get going, I would be doing more of a directional trades, debit spreads, straight calls, and stock, and so forth, depending on what I am trading. Okay, let's get to the next chart, IWM. Okay, so we knew IWM was if you had seen any of my previous videos, you know that I was extremely bullish on IWM because it had gone through this confirmation, and I was expecting this move to be, the first one of three. So and that's exactly pretty much what we are at this point. One of three. It has met all of the criteria that I wanted to see it meet. What that means is that it is above 100%. So this and these. Okay, so we know the third wave is not the shortest wave, so we know that it meets all the criteria for the start of the next wave, and in Elliott wave theory at least, and we'll go from there. So yeah, we had a bunch of trades on right here. We got bullish, right? Right around there. We got bullish, and we bought some calls. We bought some put credit spreads. This zone, once we got through it, we gapped up. This is your breakaway gap. That's what we got. This is breakaway gap. There were multiple times you could have done it. This is a belt hold. Another good signal. There's a lot of bullish signals that were occurring, and now, man, did it gap up ever? It gapped up quite a bit. Wasn't expecting it to gap up that much, but it tells you what the market mindset is when it comes to IWM or the small caps, and they are bullish small caps. They're thinking that the small caps are going to get a lot of attention from whichever the government that is going to be in charge come this January, and there just looks like this was a positioning / short covering move that occurred, this massive move that occurred, and now we're just seeing some consolidation of that, and expect it to go higher. Again, expected to go higher. My target is 187.23. That's pretty much what I'm gonna be expecting at to get to these two levels, but I'm expecting it to get to the higher level just because the sheer momentum that it's going with. It may be that maybe even higher than that. The third wave of this 3 of 3 may be higher because as long as we know that it can get extended, and it tends to be extended as long as it is greater than this move. I have not given you or shown you that. I think you guys can just figure that out on your own. Pretty straightforward. It's an extension. Okay, so the easiest way to do it would be just you take this to this. Okay, if this is your move right here, that's your 100% extension, or 200% would be 100% up to here, and 200%, so 204. That's a very much a possibility. So let's see how things work out, and go from there. Thank you for tuning in. If you have any comments, leave them at the bottom, and I will talk to you guys soon.